A very happy new year, everyone. Welcome to 2025 and this week's Technical Insights. The US market began the new year on a slightly negative note. Even though we saw some healthy gains on Friday across the board, all three US benchmark indices ended the shortened trading week with a weekly loss. On Tuesday, the S&P 500 ended 2024 with a 23% annual gain for a second consecutive year of over 20% advance. But for the month, the broad index fell 2.5% in December. The rally that we saw last Friday was founded on support from stronger than expected ISM manufacturing PMI data. US stocks secured strong gains with both the S&P 500 and the Nasdaq Composite Index up more than 1% on Friday to snap a 5-session losing streak, their longest since the middle of April last year. The Dow was also up 0.8% on Friday. All 11 major S&P sectors rose, led by the 2.42% jump in consumer discretionary stocks. Tech stocks were also a bright spot for the market on Friday, with chip giant Nvidia jumping 4.7%, while server maker Supermicro Computer jumped 10.9%. For the week, the Dow was down 0.6%, while the S&P 500 finished lower by 0.48%. The Nasdaq Composite also lost 0.51%. Last week's weakness in stocks also meant that the Santa Claus rally failed to materialize. Even with the market cooling in the final weeks of 2024, the major US indices are still not too far away from their record high after a strong year for Wall Street. Coming up this week, we will see the December employment data with ADP monthly employment report expected on Wednesday and the non-farm payroll data due on Friday, which may have an impact on the Fed interest rate decision. In Asia, Hong Kong stocks rebounded on Friday as Chinese regulators started the second operations of the rescue package for the country economy introduced in September by authorities by providing support for institutional buying. The Hang Seng Index was up 0.7%, while the Hang Seng Tech Index was up 1.05%. As part of their rescue package, about 25 managers, security firms, and insurance companies received a swap facility of about 55 billion yuan worth of liquid asset that can be used as collateral for borrowing to buy stocks. Xiaomi jumped nearly 7% on Friday close, with Meituan and Alibaba both gaining over 1.5%. However, the Hang Seng Index trimmed its early week's gain, ending the week with a 1.64% decline. This was pressured by caution ahead of Donald Trump's presidential inauguration on the 23rd of January, which underscored concerns about the potential US-China trade war. Back in Singapore, our STI was largely unchanged on Friday, advancing just 0.03% or just 1 point to close at 3,801 points. For the week, the STI index gained an impressive 30 points or 0.8% to start the new year, and its second consecutive winning week after the 1.39% gain last week. Seatrium was the top performer on Friday on the STI index and also the most actively traded stock. The rig builder added 5.8% to $2.19 on trade with 60.5 million shares traded. On 24th December, Seatrium announced that they had secured a contract win to perform engineering, procurement, construction, and onshore commissioning work for a deepwater new-build production unit under multinational oil and gas company BP. In the first phase of the development, the project will have the capacity to produce 80,000 barrels of crude oil per day. Last Tuesday, Seatrium also reported more share buyback. In an SGX filing, Seatrium repurchased 965,000 shares in the open market on Tuesday for $2 million or $2.59 apiece, and the company had been authorized to buy back a total of 68.2 million shares under its current mandate. To date, Seatrium has bought back about 24.9 million shares. So for this week's technical analysis, let's take a look at rig builder and ship repair giant Seatrium. Last Friday, Seatrium's share price rose 12 cents or 5.8% to close at $2.19. For the week, the share price rose more than 6.8% for its second consecutive winning week after previous week gain of 7.33%. From the chart, we noted that Seatrium's share price has been on a strong uptrend since June of 2024, after hitting a 52-week low at $1.36. Seatrium's recent high was seen in October at $2.15, and we have breached this level on last Friday. The 52-week high at $2.32 was seen in first quarter of 2024. We also noted that Seatrium share price is now trading above the 20 days and the 50 days moving average at $2.02 and $1.97 respectively, which means Seatrium share price has strong uptrend momentum right now. The closing price last Friday at $2.19 was also above the upper bound of the Bollinger Band at $2.13, so we may expect some kind of a technical pullback from here. On the technical indicators, the MACD is showing a positive reading and the MACD line is observed to be diverging upwards away from the signal line. This indicates that there's still strong positive uptrend momentum in Seatrium share price. The RSI reading at 75 points is 5 points above the 70-point overbought mark, indicating that we may see a slight technical pullback. So with the MACD indicating the continuation of the current trend, but the RSI signaling that the conditions now may be in overbought conditions and above the Bollinger Band, it will be prudent for investors to wait for a pullback to the previous high in October at $2.15 before considering a long position to target January 2024 high of $2.40. And these are the updates that I have for you this week. I hope you find the information useful. So do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.